country around saving for retirement. And you all know 200 shillings for the employee and employer is certainly not enough for majority of the people when they retire. And I do recall attending a meeting once, and allow me to mention that, Linus Gitahi, who was then CEO of Nation. I remember him telling me how he went to NSSF after serving for many years to get his NSSF, and he thought he had much only to get 153,000 shillings. Look, that's the reality. And you know how it is for most people, that is mostly what they save too. So the conversation was, in principle, look, we need to save more as a country. And of course, with that, it also pushes the need for proper governance for NSSF to have to build credibility with the masses. So the principal objectives around the Act is largely that: increase coverage and promote voluntary membership through a new provident fund, provide for contracting out of second-tier contributions to enable private schemes to remain relevant, which is quite true, and I guess we'll get to that detail when we move on. So Jane did mention what happened, and I do know as late as today, there's the people who've gone to the Supreme Court. They want to fast track this process. They want to stop the process. Look, if they do, fine. If they don't, look, we have work to do. So this conversation does put in play all those dynamics that we are dealing with for now. But look, we're where we are now. If the reinstatement is anything to go by, the big brother NSSF will be expecting something from employers and employees this month. Well, at least by 9th of March. Statutory contributions are going up, no doubt. The mandatory contributions will go up. I did mention that most people are unclear on how this is going to go when people go to the Supreme Court. We do know that the employers have a responsibility to make sure that these deductions are made under the Act, starting February of 2023. And of course, we do know as employers, this came as a shock, and I do appreciate that for most of the employers, there was no grace period provided for people to comply. That's the reality. Okay, so we know that the Act has established two funds. One, a pension fund that is going to cover all employed persons in the formal sector who are above 18 years of age and have not attained the pensionable age of 50, I believe. A provident fund to cover all self-employed persons and workers in the informal sector who wish to make voluntary contributions. Okay, and of course, the current contributions within NSSF are going to be closed and ring-fenced. So what is going to happen starting February is a new pension fund. And of course, the difference between the two is the pension fund gives you a lump sum, does not give you a chance to get funds or some money is coming to you every month or every year. This now pension fund is going to establish that for the people. All right. For the lawyers in the house, an employee, of course, is defined as a person who has attained 18 years and above, employed in Kenya. And this is, what the Act is defined as an employee, employed in Kenya under contract of service, not a contract for service, contract of service, a Kenyan resident, employed outside Kenya, or partly in or partly out of the country under the contract of service, entered into with an employer who resides in or has a place of business in Kenya. And I guess B and C is really talking about the issue of residence and where are you accruing your income from. Okay. Employer includes individual or corporate. So for those individuals who are sole proprietors and employers are still captured in this, and a contract of service, whether orally. So whether you have issued someone with a written contract or not, they are still classified as an employee. So an employee is not a person who has to receive a contract physically or in writing. If any of it is implied or oral, that person is still an employee. All right, and we also do appreciate that the employer includes the government. So the government employees are going to be very much a part of this. Exemptions, of course, for persons entitled to exemption under the International Convention, people who are not ordinarily resident in Kenya, unemployed for 3 years or less, who contribute to a similar system in their home country. And I do recall for, especially for HR practitioners, when you're dealing with individuals who are secondees into the country on long-term basis, long-term secondments, there's a way you can secure approval for those individuals not to contribute into NSSF. So the same is going to apply going forward. Good. Now, we are closer to the crux of the matter. And I know when we start talking about a statutory contributions expressed, as a percentage of pensionable earnings, the UEL, upper limit, lower limit. I know that is where most of the confusion is coming from. I was having a conversation with a HR colleague the other day, not too long ago, and when they told me to confirm that the contributions are 12% and 12%, look, I do know that the whole issue of 6% employer, 6% employee broken down into 6% of the lower limit and the upper limit is creating a bit of confusion. Hopefully we can be able to provide clarity on that as we move along. All right. Then there's, of course, the issue of gross salary and basic salary. And, what the Act is actually saying, they are lumping everything. I do know that there are employers who in the payslip will give you basic salary, then housing allowance. And for most of the employers, the reason why they do this is to reduce the cost to the employer when it comes to pension, so that when we say that 5% employee, for example, is based on your basic pay, then they're able to save. So when they break down and say that your basic pay is 100,000 shillings and your housing allowance is 50,000 shillings, then we're only paying pension based on the 100,000 shillings, which is your basic pay. What, again, NSSF is saying is not anymore. We are taking your basic pay plus any other non-fluctuating emoluments. And I think close to my mind, I think of housing allowance, and that is now going to be in the pot of gross pay. Of course, there's been a lot of conversations because this is not very clear. Some believe that there might have been an error in how they worded it, because I know there are people who are asking, so what happens if I get a telephone allowance? Is it going to be part of the gross pay or not? So I want to believe that with time, there's going to be clarity on what exactly they mean with gross the salary or the gross wages. Good. So let's break this down. Of course, you'd imagine in a webinar, I don't have the privilege of seeing all of you. So please feel free to use the chat to ask the questions, and then we can get going. All right. So let's break this down. And look, if you understand it, fantastic. But there's so many people who don't understand this, and we're just trying to make this very easy for everybody. So if you have a paper and pen, and I think it will be good for us to do that. A few principles, now that we are getting into the heart of this. If you have a paper and pen, just please note this down. 1, the gross salary that an individual is earning, or the salary that an individual is earning, is irrelevant to the NSSF contribution conversation, at least in the first year. Please note that, unless an individual is earning less than 18,000 shillings per month. I'm going to repeat it. An individual's gross salary is irrelevant when it comes to the mandatory contribution to NSSF. That your salary is irrelevant unless an individual is earning less than 18,000 shillings. Why am I saying this? I know there are people who think that the new 6% is on the gross pay. So if someone is earning, 100,000 shillings, they think, okay, am I supposed to give 6,000 to NSSF as employer and employee? No. All right. The NSSF has contained the issue of NSSF contributions to what they're calling pensionable earnings. And they have gone ahead and defined what pensionable earnings is, which is, so principle number one, your gross pay, which is majority of the people in the formal sector earning over 18,000 shillings. Don't think about your salary when we're talking about contributions to NSSF. Okay, you will think about your gross pay when we talk about contributions to your occupational scheme. But for the purpose of NSSF contributions, just think about what NSSF has defined as pensionable earnings. All right. So we have the employee 6%, employer 6%. But NSSF has broken down this employee component into two. One, the lower earning limit, which in the first year, and I want us to contain our conversation for this evening to the first year. I know there's a graduated scale, and I know the lower earning limit and the upper earning limit will change with every passing year. But look, let's not think about next year. Let's think about this year first. So NSSF has broken down the employee 6% contribution into two. One, the lower earning limit, which is 6,000. So you can write that down. The lower earning limit is 6,000. It's not changing this year. Upper earning limit is 18,000. Remember again, we said, number one, your gross pay, how much you make is irrelevant unless you're making less than 18,000 shillings. Okay, so now we are defining your salary. So your salary is 6,000 lower, upper 18,000. NSSF mandatory contribution is focusing on those two limits. So it is 6% of 6,000. That NSSF is calling tier one. Then 6% of the difference between 18,000, which is the upper earning limit, and 6,000, which NSSF is calling tier two. Okay. Now, someone is going to ask, or might be wondering, why is NSSF complicating this? Why not just charge 6% straight? Why? Okay, I'm going to pause right there. And I'm going to ask you to go to the chat box and just say yes, type yes, if it is clear to you so far. Just type a yes if you're able to. That it is very clear to you. Anyone? Maybe I'm not seeing the Q&A. I see. All right. Okay, I can see. All right. I see. Someone is saying it's clear. Well done. Oh, someone is saying the chat is disabled. All right. Thank you for that. Our team will be on it. Fantastic. All right. So, all right, I'll proceed. Good. So we know the taxman, 6%, 6%, employer, and now we are defining that income. Your salary has got nothing to do with this unless you're earning less than 18,000 shillings. And NSSF is saying, look, lower earning limit 6,000, upper earning limit 18,000 shillings. Okay? 6,000 of 6,000, 6% of 6,000, which is the lower earning limit, is tier one. And I said earlier before I asked you to go to the chat or the Q&A, why do you think the taxman did that? Why are they complicating it? Here's the answer. You can imagine a scenario where NSSF came and said, look, forget about lower earning limit and upper earning limit. It is going to be 6% of your earnings. Do you know what would happen immediately? That will be the death of all the private occupational schemes. They'll just die. So the NSSF was a bit, sensitive because they don't want to kill the private occupational schemes. And look, it is important for me to say this because then we understand the spirit of the government. Okay? And I want to be non-partisan here. But look, with that, I can read this. They're saying, look, I don't really quite care as NSSF to keep all your money. All I want you to do is save more. All right? So 6% of 6,000 is the chat enabled now? Someone can try and type to the chat. I want to ask you a question as we move along. I think it's the only way we can make this interactive.
Hi, Raymond. We are using the Q&A section, not the chat section.
Okay. Not. Thank you, James. All right. I'm going to ask you a question based on what you can see on screen. So what is 6% of 6,000? Don't give me the answer. I know the answer is 360. Okay. Is that tier 1 or tier 2? Someone type. Is it tier 1 or tier 2? Thank you. Fantastic. Good. Fantastic. Well done. Good. All right. There's someone on email. We'll get there. We'll get there. Fantastic. Now, someone has asked, what constitutes pensionable earnings? So pensionable earnings, okay, for the purpose of NSSF is defined within the ambit of 6,000, which is the lower earning limit, and the upper earning limit of 18,000 shillings for year 1. So Mr. Roberto, thank you for asking that question. I hope it is that simple. What constitutes the pensionable earnings has been defined in the first year as upper earning limit, that's the ceiling, 18,000. The floor is 6,000. I'm going to tax you based on those two. Full stop. At least the first year. Okay. Going back. So we know it's 6,6. So the issue of confusion on it is 12-12 out. It is 6% broken down into 6 of 6,000 and 6 of the difference between 18 and 6,000. And 6% of the difference, which is 12,000, comes to what? Someone type quickly. All right. The answer, 6% of 12. Someone can type for me. What does it come to? Oh, is it? Oh, good. All right, here we go. Someone has already answered. Thank you very much. 720. Now, 720. Is 720 tier 1 or tier 2? Someone answer. Is 720 tier 1 or tier 2? Oh, we're back to the chart. Thank you. Okay. Thank you. Well done. So that's very clear. 6% of 6, that 360 tier 1. 6% of the difference, 12,000, is tier 2. And the same applies in the case of the employer. Same amount. So when you hear of this issue of 1080, 1080, it is the 360 here plus the 720 here, which is coming to 1080 plus the same 360 and the 720. That's it. 1080, unless someone is earning less than 18,000 shillings. Good. So look, we can move on. This is very, very important because for majority of you, 98% of you, your employees are earning more than 18,000 shillings. If they're earning more than 18,000 shillings, look, you will have to deduct 1080 from the employee, and the employer has to give 1080. And that the monies will have to be remitted to NSSF. Now, remember, I said, why has NSSF broken down this issue of tier 1? It is to protect the private occupational schemes. So this 6% of the lower earning limit of 6 is tier 1. NSSF is saying, look, that money has to come to me as NSSF. And the 6% of 6,000 from the employer has to come to me as NSSF. So the 360 and the 360 here goes to NSSF. The 720 here and the 720 is tier 2. I want to believe that is clear so far. Good. Look, HR professionals, payroll people, COOs, GMs, CFOs, you get that, you're good. Don't worry about this whole thing of graduating next year, this issue of the average national wage. Don't bother yourself with that for now. I'm going to stop there because once you understand this, you're good to go. The next thing I'm getting into now is the Excel. Thank you. All right, let me get some comments. If you feel that you didn't understand this whole issue and it's clear to you, I want to get the comments now. Aha, someone is asking, so employees earning less than 6,000 will not be deducted. No, they have to be deducted. Why? Because NSSF has defined the ceiling. They have defined the ceiling, sorry, the floor as 6,000. They have defined the floor as 6,000. Look, thank you, Josephine. This is a good question. But look, I think another question begs, thank you, Emily. Another question begs, who is that paying people less than 6,000 shillings, which is lower than the minimum wage in Kenya? That's a serious issue. But look, let's move on now. I want to get to the Excel. Okay, someone is asking, can you repeat the 2 720s and where they're going to? All right, I'll do that. I hope you can all see the screen. I said NSSF is saying contributions 6% employer, 6% employee. That's number one. Don't think about 24%. NSSF has gone ahead and broken down that 6% from the employee is broken down into two. They have defined pensionable earnings, not your salary. Pensionable earnings, according to NSSF, is two things. The floor is 6% of 6,000. The ceiling, the maximum I can take away from you is 6% of the difference between 18 and the 6,000, which is the lower earning limit. And why has NSSF done that? This part, which we're calling tier 2, and this part, which we're calling tier 2, is to protect the occupational schemes, the private ones. Because if NSSF did not do that, then you're almost killing them. As the years go by, you're actually saying, is a typical case of what happens in Uganda or Tanzania, where contributions to the National Social Security Fund is 10%. And you will note this for anyone who's worked there. In these countries, the occupational schemes, the private ones, are almost non-existent, because why have it when the government is taking 10% of your gross pay employer-employee? You see what I mean? So in Kenya, they're a bit considerate of the private sector. They don't want to kill the umbrella scheme. They don't want to kill the standalone schemes. They don't want to kill the group IPPs. They're saying, look, all we care is that you save more. So 6% there, and I'm just doing this for the purpose of that individual who asked me to repeat. So tier 2, which is a 720, is going to go to NSSF. 720 goes to NSSF as tier 2, but here is a catch. You have the opportunity to move that tier 2 contribution. That 1080 can go to your occupational scheme if you have one. Now we'll talk about the issue of contracting out. And please note, I am using the words contracting out on purpose. I am not using the words opting in and out. Why? Because for majority of the people, they thought that opting in or opting out means you do not want to contribute to NSSF. That is not the meaning. So please, going forward as HR professionals, don't use the word opt-in and out. Use the word contracting out. It will be more palatable, okay? So if you are a member as an employer of an occupational scheme like the Zamara Umbrella Fund, you have the opportunity to contract out that 720 we talked about here, and from the employee contribution, and the 720 from the employer to your occupational scheme, plus your pension. But the tier 1, the 360 employee and the 360 shillings employer has to go to NSSF. That you cannot remove. I trust that is very clear. Now, friends, I want us to go to the Excel. Okay, I see a few questions here. All right. So the person who asked, what did you say is the benefit to the private schemes? Do you feel you understand it now? Benson. Got it. Fantastic. So let's go to the and my co-panelist, if there is a question that maybe I've missed out on, feel free to maybe answer or raise it so that we can address it. And look, for us and for me, we prefer the simple over the complex. If you don't understand this as a HR professional, you're going to have a rough time, not just this year, but next year. And I know some of you have been asked to make a case of the impact of this on the employment costs. We'll get there, okay? But it is very, very important. And I know our IT people, I know you send the link to YouTube. I'm not so sure that people watching us from YouTube are able to ask questions. I'm not so sure about that. But hey, let's move on. Okay. I'm going to share the Excel now. All right, if you can see the Excel, say you can see it. Just say yes. Someone can just type yes if you can see the Excel. Okay, thank you.
Yes.
Perfect. All right, so let's go to the Excel. I'll skip the instructions. Let's go to the data. So this is how we have broken down this. Look, I'm going to confess now. Look, the last time I engaged this whole thing around NSSF was in 2013. And most of you remember. And I know I was speaking to the founder of Rise and Learn. And we're just having a chat, and she was telling me, look, in 2013, most of the HR professionals understood this whole thing inside out. look, 10 years later, you will not remember a thing. So when this issue came, I'll tell you, and I'm confessing now, I had forgotten it. And what I'm sharing with you today, I actually sat down, and my team will tell you, I sat down one afternoon in the office and I created this Excel, and I said to the team, this is the only way I will understand. When I do it myself and think through all the formulas and what it means, is the only way I'll understand it. I can tell you, after a couple of hours through this, I understood this inside out, totally. So, and I thought it would be good for us as HR practitioners to share this so that you're better informed. And I know most of you are having to deal with questions from employees, and your CEOs asking, so and so, what does this mean for us? By the end of this conversation, this is going to be clear. So, how we divided this Excel. This is how we're doing this. First column, name, department, email address. Remember when I sent the post on LinkedIn, I said, look, the Excel, I'm putting emails, because with that, you're able to do mail merges. You're able to do a mail merge and send a personalized email to everybody in your organization saying, dear Raymond, this is to inform you that starting February, X amount will be deducted as the monetary NSSF contributions to your as an employee deduction. And with this Excel, you can do that comfortably. Okay. The other thing this Excel is going to do for you, there is something here which we're calling the pivot tables. You will be able to justify to your leaders the cost implication of the new contributions. You will be able to justify in a flash. You'll just put in your numbers. You will do the pivot tables. We've done the formulas for you. You will just refresh it, and you will be able to know very, very quickly the cost implication of this to you as an employer. All right. For example, and we'll get there, but I don't want to run ahead of myself. Then we put basic pay. Why we put basic pay? Because NSSF has talked about the issue of gross. And we just want to be clear and to be compliant. Basic pay plus maybe house allowance. They're saying, it is not basic pay. It is basic pay plus your house allowance. That is what we're working with. I hope it is clear so far. This is how we've broken down the Excel to make it very easy for you. One, you see this area I've highlighted in Zamara green is the current arrangement. Okay. And we've also created a cell here for you. You are free to put your contributions. Look, I know some of you it's 3%, 3%. I know some of you it's 10%, 5%. I know some banks, 7%, 3%. I know some startups. It's employer 3%, employee 0. I know. Okay. We are giving you that cell. All you need to do is insert, and it's going to do the work for you. Okay. This is HR being there for fellow HRs. Okay. Good. All right. So Bernard T. So I see why 3%. I guess now you see that is just for, let's just put it then 0 for now. Good. So this is the current arrangement. So for you as a HR person or the payroll person or the CFO or the COO or the CEO, okay, if you're a member of an occupational scheme, if you're a member of an occupational scheme, you have defined the contributions of employer and employee, right? Whatever that is, you put it here. Okay. So please, for purposes of the illustration, allow me to put 5%. No. All right. The first person to type on the chat, give me for your organization. Thank you. So, okay, Christine, got you. We're going to work with 5-5. You are the first one to respond. So this is Christine's organization. They work with 5-5. There you are. So, okay, let's go. Christine, give me a salary. Don't give me yours, but give me a salary of maybe someone, for example, for purposes of this illustration. Type Christine, Mathia. Okay. Christine has typed 100,000 shillings. So here we are. Let's type 100,000 shillings. I hope you can all see that. That is row 5. So this is Christine's organization. So Christine, you currently, that individual X contributes 5,000. So when I say OS, that means occupational scheme, right? Christine, if you're a member of an umbrella or a standalone, doesn't quite really matter, or group IPP, 5,000 goes from the employer, 5% from the employee, then you give 200 and you give 200, employee, employer. All right. So total current employee contribution is 5,2. Total current employer is 5,2. I trust we are clear so far. Now enter the new NSSF contributions. What is going to happen this month? Okay. All right, let's go. We said, remember our little conversation on the 6% of the floor. The floor is 6,000 shillings. There you are, 360. Remember that tier 2, which is 6% of the difference between the ceiling and the floor, which is 12,720. There you go. You put these two, that is 1080. EE means employee. So EE, employee, ER, employer. Clear so far? This person is earning 100,000 shillings. Same. Employer will have to give 6% of the floor, 6% of the difference between the ceiling and the floor. The ceiling has been defined as 18,000. The floor is 6,000 in the first year, 720. There you go. So Christine Mathia, that is your organization. 1080, 1080. But you know very well, you know that 360 tier 1, employee 360 tier 2, combine 720 and combine 1440. Okay, 360 by 2, that's 720 tier 1 total. Tier 2, 1440 is going to NSSF as tier 2 before you contract out. Good. So Christine, scheme, pre-contracting out. What are you doing? The difference between the 5,000, remember we said 5% of 100,000 is 5,000, employee, 5% employer. We are using this illustration here. Okay. The difference between 5,000 and the 1080 is what is going now to the scheme, your OS, your occupational scheme, 3920, 3920. Allow me to stop. Christine, someone is asking quickly with the UEL and LEL. I like when you use those words because that tells me you understand this thing. Yes, that is going to change with time. Okay, I didn't want to bog you down with the transitions. I know based on the 2013, we had the floor. Allow me to use the floor. LEL, that's floor. UEL is a ceiling. So the floor this year is 6,000. The ceiling is 18,000. Next year, unless something changes, is going to be 7,000 as the floor. The ceiling is going to be 1 times the national average income. Okay? Which I think will be between 36,000 and 40,000 shillings. Year 3, the floor will be 8,000 shillings. The ceiling will be 2 times. So do you see that ceiling? And you can see where we're going with this, and we can work it out. But you can see with time, organizations that don't have an occupational scheme will be remitting more funds to NSSF. Nothing wrong with that. We'll be remitting more funds to NSSF as tier 2. So look, is this the right time to have a conversation around getting into an occupational scheme? Yes, it is. Because your employees are going to ask you next year, okay, when your tier 2 will be, for example, 40,000, which will be the ceiling, minus 7,000. They'll be asking 6,000 of 33,000 will have to go to tier 2 as an SSF. Your employees are going to ask you some questions. I hope you'll have the answers. If you contract out or get into an occupational scheme, you won't have to have that difficult conversation with your employees. I hope that's very clear, Abdul Malik. If it is, just tell me yes so that I move on. Thank you. Super. Good. So this is Christine Mathias' company. Now, that difference between 5,000 shillings and 1080 is what you will send to the OS, occupational scheme. There's something, a little detail here. And please, I want you to write this down. Please write this down. For organizations that have an occupational scheme, whether it is a group IPP, whether it's an umbrella or a standalone, guess what, ladies and gentlemen? Those companies, this is not good, but they're actually saving 200 shillings. They're actually saving 200 shillings per employee. But there's going to be a caveat right there, okay? And I don't want to get into the detail of the trust deed and special rules, but I will mention because I know these are HR professionals and I know you're being asked about these things. So I'll get there. But let's first walk quickly through the Excel and we'll get into that detail. After you get the approval by RBA to contract out, what are you contracting out? You're contracting out the tier 2. Okay? What tier 2? You see this amount, 720, 720, the difference between the ceiling and the floor, 6%. That amount, when RBA says, yes, you can contract out, what you're simply saying, that tier 2 contribution, which is not changing for those individuals earning what, 18,000 in this first year, that 720 can now go to your occupational scheme. Allow me to call it OS. Can go to your OS, the employee, there. But please note, in this presentation, I have made it clear and I'm separating tier 2 here. I didn't just come and say now that after you contract out that it is going to be 3920 plus 720Y. The rules are very clear. Even when you contract out, the tier 2 contributions need to be very, very clear and separate. Any scheme knows that. You have to separate in your accounts for employees. When you're sending those pension statements, it has to be very clear. Then that 3920, if you add now that you see the only amount that is going to tier 1, if you're following me closely, after you contract out, question, after you contract out, what amount will be left with NSSF? Question? Okay, thank you, Bernard T. Break it down. How much for the employee and how much for the employer? Fantastic. Good. Someone has asked a very interesting question. That means OSs will be making less this year now that NSSF is taking a piece of the cake. Well, yes, to the extent that tier 2 goes to NSSF. Okay, to the extent that the tier 2 contribution is going to NSSF, yes, OSs will be taking in a lower amount. Good. All right. Let's get into something here. I hope so far this Excel is clear. I have given you, yes?
Before you proceed, there is a question from Esther Wanyoike, who is requesting that you repeat column, in column H.
Column H, this one. Okay. Okay, Esther. Now, what we did, I asked a lady called Christine to give me an example of their pension scheme. How much do they contribute, employer and employee? They told me 5-5. So that is why we put it 5-5. So Esther, it could be that for your organization, it is different. So Esther, so that it is clear to you, tell me how much, do you have an occupational scheme, a pension scheme? Just type yes or no, because I want to use an example that is relevant to you. Do you have? Fantastic. Thank you, Esther. How much? Give me the employee employer. Start with the employee contributions. How much? Employees contribute how much? Oh, thank you, 7.5. So good. All right, Esther, give me an amount to work with, an amount that will make sense to you. Thank you. All right, Esther's given me 7.5. So let's work with Esther's example. There you are, Esther. Someone is earning 100,000 shillings. What happens currently? 7.5 employer, 7.5 employee, NSSF 200, NSSF employee 200. That is a current arrangement. But I need to mention something here, and I don't want to be complicated. Look, if you have a pension, you must have signed either, if you have a standalone, you have your trust deed and rules. If you have either group IPP or you have an umbrella scheme, you have the special rules that you have signed to that TDR, okay? Now, there is a component, please write this down. There is a clause in that special rules or in the TDRs that asks you to define, please note this down and don't forget HR professionals, that asks you to define the employee contribution and the employer. In the case of Esther, if you check your TDRs, trusted rules or special rules, I'm digressing a bit, but this is important, you have defined the 7%. Okay. Sorry, I know on the, it is showing 8%, but it is because of the decimals. Trust you, it is 7. You can see on the window, it is 7.5. Now, if, sorry, I lost my trail of thought here. In that TDR or special rules, you define that contribution. That is where you have your 7.5%, 7.5. Christine Matthew, that is where you've defined 5%, employee 5%. There is something that I want you to write down. Please go and ask your pension provider. If it is Zamara, talk to Zamara and ask them, does it say it is the employee contribution of 5% less NSSF, or is it in addition to NSSF? Very, very important. Please note that. And I don't want to be technical because that's not the purpose of this webinar, okay? But that is important. Just to test that you understand, in this scenario for Esther, where the employer gives 7,500 employee and they go ahead and contribute NSSF 200, what do you think the TDR or the special rules say? Is it NSSF plus pension, or is it pension minus NSSF? Someone give me an answer. Someone is telling me minus. Can I repeat the question? This is interesting. You see, I can see people saying minus, less, someone is saying plus. This is very interesting. Someone is saying minus, someone is saying plus. Good. Let me repeat the question. I said, in that scenario, in Esther's company, where they contribute 7.5, and the amount is 100K, it is 7.5 to the pension employee, employer 7,500 employer. Then they give 200 to NSSF and 200 to NSSF. And I asked, in that scenario, what do you think the TDR says? Does it say pension plus NSSF, or does it say pension minus NSSF? Good, let me answer. All right, I'm going to answer. The answer is plus. Okay, so I think that's a bit technical. So I will not dwell there because we don't have enough time to address it. Thank you. Nick Kithinji, fantastic. It is OS plus NSSF. So if your TDR and special rules, note that one down right now. If your TDR and your special rules say it is OS plus NSSF, well, you know what, friends, you're going to be in a lot of trouble going forward, because what that means, you're going to be giving 7.5, which is 7,500 plus 1080. It's going to be 7,500 plus 1080. That conversation will not be interesting with your CEO. My advice to you, speak to your pension, ask for those special rules, begin thinking hard of how to revise that clause so that it reads OS less NSSF. Only then. Good. Only then will this make sense. So, Esther, back to you. This is your current arrangement. Okay, I'm not able to see the chat now, so Corraro, you can help me out if Esther says something. So Esther, this is the current arrangement. Going forward from February, what's going to happen? 1080, I want to believe you understand now the whole issue of employer, employee 6%, 6%. 1080, which is tier 1 plus tier 2. 1080, which is 360 plus 720, 1080, 1080. Aha. So here you go, Esther. Esther, assuming your TDR or your special rules says your pension contribution less NSSF, it is the difference of 7,500 minus 1080 that will now go to the occupational scheme. And with that, so any occupational scheme, any company that have a pension or provident, and it is 5% or whatever amount less NSSF, guess what? Your employer is saving 200. That 200 that used to be, and I'll tell you what, in practice, and I'll give you a real example, even with us as Amara, our special rules, because we're members of the umbrella scheme, our special rules say it is the contribution less. But because 200 was such a little amount, historically, we always used to give your full pension plus 200 because the 200 amount was negligible. But I don't want to get into the technicalities of why it made sense to have just the 200. But if you care, I could tell you that for budgeting purposes, you can imagine for most of the organizations, people get into pension after confirmation. So if you only give the 200, if it's pension less or plus 200, how do you do that for budgeting purposes? So for that reason, it was always easier to give your pension plus 200. But this is the alarm clock that is telling people, go back to your special rules and pay less. So Esther, back to you. 6420 now will go. After you get contracting out approval, it is going to be employee, the 720 tier 2 plus 6420. And if you do the math, you will notice it is going to be 75 minus 360 because the 360 is going to tier 2. Esther, is it clear? Esther, I hope, why are you assuming that all tier 2 will go to NSSF? So good question, Sam. All tier 2 is going to go to NSSF unless you contract out. Does that help some? Some? All right, I think some has gone quiet. Okay, but if you contract out, that tier 2 portion can go to your occupational scheme. Sam, I hope that's clear. All right, Sam is a bit quiet, but it's fine. Okay. So what this Excel is going to do, you can now paste the name of your employee, the department they are in, the salaries they are in, and it's going to work it out for you. Can I go to the pivot table now? If you want me to go to the pivot table, you can say yes. Thank you. Okay. All right. Thank you, Sam. Sam, and look, can I tell you what? I am not looking for correctness in this webinar. Okay? So if you're not sure, you better ask now, because it's going to help us know where you're at. Okay? Don't be bothered about sounding right and being right. It's fine. Okay? We've all gone through that learning process. Okay? So what is a contracting out? Is it not the same as sending to the scheme? Okay. Contracting, good question. So I hope I get you, Mr. Sam. So contracting out is the process where RBA gives you approval to remit your tier 2 contributions to an occupational scheme. I repeat, contracting out is the process with which the employer writes to RBA requesting to remit tier 2 contributions, both employee and employer, to their occupational scheme. That is a contracting out process. Okay? So when you get approval to contract out, that tier 2, 720, and I'm using that, assuming everybody's earning, this is a person earning over 18,000, that portion will now join the other amount balance that of pension in the OS. So NSSF will only remain with tier 1, 360. Sam, does that help? I hope it does. Good. All right, everybody, I am going to the pivot. This pivot table now summarizes. Now, let's go bit by bit. So the role labels is your department, and you can decide your role labels can be individuals, but there's no need to talk about individuals. I think it's better to cluster around departments so that it breaks it down this way. This is the current sum of amount. This is your typical 200 times all your employees. This is a current 200 times all your employees. So 19.2. So this is a classic case. Let's go back to data. So with this is a company that has 100 staff. We clear? All right. So the pivot has picked up this NSSF employee, the 200. It gives you the total. Then the sum of amount that goes to the occupational scheme. So allow me to use this in a practical way. Let me go to the case of Christine, where the company has 5%. So 5%, the 200 employee, 200 employer, current arrangement. Then the 5,000 of the guys earning 100,000. This is here. Total, it gives you. Total, it gives you. Now, this is the current arrangement as it is. This part I've highlighted in gray between column B and column E. With the new NSSF, things are changing up a bit. Okay? The sum of the total new amount, the 1080, is here, 103. Sum, employer, that's 1080 times all your staff. 103, and of course the number is the same because it's 1080, 1080. We're assuming in this company, everybody's earning above 18,000 shillings. Okay, now, and what happens here? The amount that is going to the scheme is less than what is going here in this company already. So, but this assumes that tier 2 has gone to an SSF. Okay. And I trust I'm not losing you. Okay. Once you contract out, what is going to happen to column F and G? That amount will go lower. It will just be 360 times the number of staff, 360 times the number of staff, and you'll be able to wing a good portion of this 103, 200. I'm using that for this illustration. You'll be able to move it to column H and I in the post-contract out. Now, I did say earlier that if your trust deed and rules or your special rules say pension less NSSF, your employer is actually saving 200 shillings per employee. Why am I saying this? Why am I saying this to you? One of the challenges that HR professionals will face is to justify, and I know you are pro people, you want pushing the people agenda for your people. This is a good opportunity for you to discuss the issue of pension if you don't have one. And maybe that's the minority. You can talk about that you can actually say this boldly and say, look, companies that have a pension scheme are actually saving now 200 shillings per employee. They are, and they will save that amount, unless the special rules are saying pension contribution plus NSSF, which I can assure you, those amendments will need to be done very quickly because you're going to have a nightmare year 2, year 3. Okay, so look, this pivot table does the math for you. You will be able to use this to make a clear justification. You'll be able to know how much is going to NSSF in the new, how much is going to the scheme, how much am I saving the company? Here, saving to the employer is 12,972 this month for this company. Okay, look, and I didn't want to be overly, because look, this is a pivot table. You can add so many, other columns, but I didn't want to do that. But you have the opportunity to do it. Okay, so please note, because I do note now that we perhaps 10, 15 minutes to the end of the webinar. Please note, okay, that issue of you engaging your occupational schemes to check what your TDRs and your special rules say. Very, very important. Why? Because you don't want to be non-compliant, and you don't want your employees to ask you, why are you deducting, and the special rules doesn't allow you to do that. So you better make those amendments. 2, please write this down because it's very, very important. If you do not have a pension scheme, a few things I'm going to say. If you do not have a pension scheme, your money remains with your tier 2 contributions will remain with NSSF unless you get into an umbrella scheme, you move into a standalone, which quite honestly doesn't make sense nowadays, or you get into a group IPP. Okay? Now, there's something I need to say. Why? Why is it important to do that? Because if you don't, that 720 is going to tier 2. 720 employees going to NSSF. And there's nothing wrong with NSSF. But I'm just talking about this because these are the questions your employees are going to be asking you. Okay? They will ask you this question. So very, very important. Something else I need to mention, please note. And I know if you're joining us and you're in a startup, I know a couple of startups that say, you know what, we do not want to contribute, we do not want to open an OS. Go open your own individual IPP and we will contribute to that. I know it is happening. Please write this down. You will have a challenge with contracting out. Why? Because the process of contracting out has got to be led by the employer. So if your employer doesn't have a group IPP, they normally contribute to the individual IPPs. Who is going to start the process? So if you're a HR head, you need to have this conversation now and say, look, it is going to be laborious administratively. It is actually non-compliant. It's very difficult. So for these individuals, guess what? Big Brother is going to remain with your tier 2. And that tier 2 is increasing every year. So it is timely to have that conversation to move to an umbrella scheme or to get into a group IPP. Of course, I would advise you to go into an umbrella scheme because of the economies of scale. The administratively is less nightmare. You don't have to think about corporate trustees for yourself, which is the case for standalone schemes. So I'm just giving you a few tips. Something else I need to mention, and I'm just saying this out of practice. Look, for some of the employers, and I know them, okay? This is how their pensions look like. The employer gives you 7%. Employee gives you 3%. I'm not mentioning names. Some employers contribute 3%. And maybe employees left to contribute 3%. Let me tell you what's going to happen for these employers. I'm going to give you a classic example of an individual in your organization who is making 25,000. And I don't know what is going to happen, but I guess you can see that for this individual earning 25,000, and there are, maybe we can even talk about 35. And I don't want to lose you. I don't want to lose you, okay? This is a classic case of an employer who has 3%. So this is what is going to happen. Starting this month. There is nothing left, okay, to move to the scheme after you contract out. And yet, for some of your other employees, there is an amount. So guess what is going to happen? You'll have cases of employees going to HR and saying, hey, wait a minute, there is no amount going to the occupational scheme, my account for pension. It looks like all the amount is being swallowed up in the NSSF one. And yet I know you're contributing for others. Guess what? It is because of that unique thing of 6% is going to come haunting us. My advice to you again, of course, we don't have the time to go through that in detail, but please, it is about time you begin warming up to the conversations of moving this to 6% and at the very least employ 6%. Because the issue, remember, this upper earning limit, the ceiling, is increasing. By year 3, it might be 3 times the national earnings, which might be 120,000 shillings. What's going to happen? There will be a clash, a big conflict, where you are being asked to contribute 6%, or the difference between that 6% and the lower earning limit. And it is actually against your special rules, because your special rules have 3%. So HR professionals, CEOs, COOs, begin thinking about that. Of course, the overarching issue is this. There is a push towards saving more. And I do agree. Quite honestly, we do need to save more. I mean, in the US, and look, Tanzania, Uganda, 10%, 10%. Kenya has been 200. It's about time we catch up. US, national your social welfare, you contribute 6.2% before you talk about your 401k or your Roth IRA. So these are things that we have to think about as a country. So again, I just want to be above board on this. You need to think about this. I foresee in the next 1 or 2 years, there should be no scheme with a less than 6%. Now, let's talk about the process of contracting out, because I know it's a headache. Allow me to say this to all of you. The issue of contracting out, don't be in such a hurry, because you're not saving anything. You're not saving anything by contracting out. I know people thought when you're contracting out, you're not going to contribute tier 2. No, no, no. Contracting out simply means you're not going to remit your tier 2 funds to NSSF. Okay? And even if you contract out next month, you still have an opportunity to move the tier 2 funds that are with NSSF to your occupational scheme. So there is no loss. Having said that, for those individuals who are clients of Zamara, we are helping companies, and even if you're not, we are helping companies with the process of contracting out. I did meet my colleagues in the office, and I know there's the issue of the C1 form, and I know there's the issue of the board resolution, and I know there's a letter that needs to be done. We can help you with that process. We even have templates. Please reach out to us. Of course, you appreciate this webinar. There's as much as I can say, but I know. But I think for the comfort of every participant on this webinar, look, don't kill yourself over, don't kill over regarding contracting out. You can contract next month. You're not gaining or losing anything. Okay, when you contract out, you'll still be able to go to NSSF and get the tier 2 funds that you had lodged with NSSF for February deductions and move them to your OS. Okay, I hope that's very clear. Good. If you already have an occupational scheme, the existing definition of member contribution or the employer contribution in the trust deed is the determinant. It decides whether it is plus or minus. Correct. George, you're absolutely right. Okay, may you kindly share the recording? Yes, I'm sure our team is going to share that recording. Does Zamara have an umbrella fund? Yes, we have an umbrella fund. We are the largest umbrella fund. No doubt about it. We're the largest. So, Paul, your funds are safe with us. What are the administration costs? I think it's 1%. What I can tell you, the comfort I can give you, Paul, is the admin cost is not more than any other umbrella fund, and there's a lot of value that you accrue by being a member. Okay, good. So look, I do want to respect your time, because I know most of you have families, and I know your kids perhaps are surrounding you and wondering why dad or mom is taking so long. So look, we're going to share this Excel with you because I promised. This Excel limits to 100. I'm sorry, but because it is, we have locked in the formulas in there. If you want to use this, you need to contact us. If you want, if you say you have 5,000 staff or 500, you need to reach out to our team if you want to use this. Of course, I think that will come at a fee, but we're willing to give this free of charge. Good. So we're drawing to the end of this webinar. I trust that it's been of much value to you. And look, HR professionals, let's keep the conversations going. I did go through that whole process. When I was doing this, is because I needed to understand, and I needed to understand it so that I can help my fellow HR practitioners. What I can assure you, when you go through that Excel, I guarantee you 120%, you will understand this NSSF thing inside out. Okay? So with that, I must say, I must thank all of you for spending your 1.5 hours with us. And long live HR professionals. You are amazing people. And if there are any CEOs or COOs, you're also amazing people. Please support the HR professionals. They're amazing and we need them. So thank you very much. Over to you, Jane.
Okay, thank you very much, Raymond, for taking us through this session. I do believe that all of us have now understood better how to go about the calculations. And if you feel you have any further clarifications, please feel free to reach out to us. We'll be glad to assist you. So thank you all very much, and do have a great evening. So you're free to leave now, and any other further conversation can be taken up with us directly.
All right. Jane?
Yes.
Don't worry remember, there is an email address we asked you to send that NSSF help, isn't it, Jane?
Yes.
That's the only way we can send you the Excel. So please send us so that we
Mhm.
can send you the Excel.
Yeah.
Okay. Our offices, they open as early as 7:30, closing hours. You come before 5 o'clock, you'll find someone. Wow, there are very many questions, Jane. I think, yeah, feel free to come to Zamara. We're more than happy to help you.
Yeah.
All of you HR professionals, please come. We can do the best we can to help you.
Great. Thank you for that, Raymond. The email addresses are coming through, so we'll give it a few minutes so that we can pick those up.